If you are waiting for mortgage rates to drop by exactly 1% before you refinance, you are likely following a rule of thumb that is costing you thousands of dollars in 2026. The biggest myth in the industry is that a refinance is only worth it if you plan to stay in your home for the next 30 years. In reality, we look for your break-even point, which is the exact month where your interest savings finally outweigh the closing costs of the new loan. Another dangerous lie is that a no-cost refinance is actually free, when the truth is that the bank is simply hiding those fees in a higher interest rate. You might find that paying your closing costs up front actually saves you an additional $20,000 over the next 5 years. Don't assume that you have to stick with a 30-year term just because that is what you have now. Switching to a 20 or 15-year term can be a massive wealth builder. Most homeowners also forget that a refinance is the perfect time to cancel expensive private mortgage insurance if their home value has increased. Stop guessing at the math and let me run a net tangible benefit report to show you exactly how much cash you are leaving on the table.